We detected an unusual trade worth $93 million on Oracle stock, ticker symbol ORCL. And so in this video, we will analyze this unusual option activity to find out if this wealthy investor is bullish and buying or bearish and selling. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, to make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. And so without further ado, let's dive into our data analysis so that our subscribers and members can profit from this deep knowledge too. As we can see here on the options time and sales tape, the most unusual trade happened on June 23rd at 10:45 at the 31-second mark for these October 17 options at the 180 strike calls. A quantity of 28,846 contracts were being traded for a price of $32.50. And so we can calculate the total cost of this trade. Now remember, this is option prices, and so we either multiply by 100 or move the decimal 2 places to the right, since each options contract controls 100 shares of stock. And so each of these contracts costs $3,250. And so we multiply this by the total contracts of 28,846, and we get a total trade value of approximately $93 million. But keep in mind, just because a trade is large does not necessarily mean it has a high chance of success. In fact, this trade has a lower chance of profit in comparison to the smaller, more selective trades that we shared on our website. And so if you want access to the lower risk, higher probability of profit trades, then go to our website. We'll put a link up here. And keep in mind, our members also get earlier access to trades like this before anyone else, before we share it with the public. And so if you're tired of being late and want more time to act on these opportunities, then just head over to our website, where you can see exactly which stocks wealthy investors are trading on Wall Street and when they're doing it, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that said, even though this trade has a higher risk, we still took it because we used position sizing to manage our risk. As you can see here for the October 17th options at the 180 strike calls, since this was a new opening position, we also got into the same position here. POS stands for our position, and the green color indicates a buy position. Now, how did we know these were new opening trades? Well, notice that the current open interest is at 29,000 open contracts. And if we look back at the historical data on June 23rd, when this trade was made, we can see here for these October 17th options at the 180 strike calls, there was only 1,200 contracts that was previously opened. So we know that those 28,000 contracts that were being traded at the volume were new opening trades, since they added to the open contracts. And that is why we also took this trade, because based on our deep analysis of other variables and data sets, this wealthy investor bought these 180 strike calls for $32.50, as we saw earlier on the options time and sales tape. And so when we analyze this trade, we can see here on the risk profile profit loss graph where the profit loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the profit or loss. Note the zero break-even line here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below the zero break-even line as the share price goes down, this trade becomes more negative loss. And if it trades above it as the share price goes up, this trade becomes more positive, more profitable, because this trade is going long bullish on Oracle stock. And we can confirm it on the options Greeks. We can see here that this trade has a positive delta. If it was a short bearish trade, we would see a negative delta instead. But keep in mind the risk with this trade. We have a negative theta, which means as time goes on, this trade loses value due to time decay. And that is why you can see the purple line drops down lower as we approach the option's expiration date. Because of this, the break even on this trade moves higher as time goes on. And that is why you can see here that even though the call options that we bought have a strike price of $180, the stock needs to trade above $212 per share to be profitable at expiration. Because of this added risk, along with other factors, we only took a small position in this trade. We don't invest a lot of capital into these higher risk trades. Instead, we focus most of our capital on the lower risk, higher probability of profit trades, the kind of trades we share on our website. We'll put a link to our website here where you can also learn more strategies to increase your profits. Let us know in the comments. Do you think Oracle stock will move higher, or do you think it will move lower? As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.